Hi everyone, thanks for coming back and watch this video again. So this week, what are we be talking about? Same as usual, we'll review what's happening on last week, and then we will take a look what is coming up for the next week, and things to watch out for the next week to prepare yourself for the market tradings or investing as well. So we can see that on last Friday, Nasdaq raised for 5th straight days. Actually, just a 5th straight day, but to me, I feel that if you look at the overall pictures, right, it's not really a good sign after all as well, because it might be a dead cat bounce, which I have been mentioning in my chart previously. You can see that since 15 May, looking for dead cat bounce, after being dropping for so many weeks, or perhaps since the start of 2022, right? So this kind of news, right, is actually somehow like give a false hope to the market itself, of giving the novice the wrong signal to say that the market is coming back. But do take note what's happening on last week. Like I say, it's a heavy economy data. So last Friday, right, I think there is a good jobs reports. The non-farm payroll is way better than the expectations, and that might be due to that cause the market to go higher. But actually, it's not really that high. I mean, just 0.12%. How high can it be, right? Mainly the thing is that right now, good news is bad news, which I mentioned previously as well. Why? I think I did prepare in my last week video. What did I say? If let's say the non-farm payroll came above the expectations, it give the so-called the signal for the Fed to continue to hike the interest rate higher. All right, maybe 75 basis point. As you can see from the title, the Fed can move 75 basis point at the next meeting. So this gives them the reason, but to confirm that the inflation rate has not been controlled by the past few interest rate, we will look into the CPI data for this coming week. All right, so this is the consumer price index. This will tell us where the US is standing after increasing the couple of rate previously. All right, so this good news, non-farm payroll increase, what does it bring? It's actually telling you that perhaps the recession is not what we are expecting after all. Because if let's say there's recessions, right, job will slash, pay rise was cut, everything will slash, right? But if let's say there is recessions, why are there higher payroll instead? So it seems like recession is not in the town at the moment. We won't know. This data may come in higher at the expectations, but it may came lower, maybe starting from the second half of this year as well. All right, this is the June. We are right now kicking in the second half, July. So we will see from August how is July performing after a couple of rate hike, right? Okay, but anyway, it came in way better than the expectations. So this is what they are talking about. So I think treasury yields, right? Later we'll look at the chart. I think treasury yield is only one way ticket. That means it's only the upside. Irregardless what the inflation is there, rate hike will continue. Be it 25, 50, or 75 basis point, it will also continue to add on to the treasury yields rate, right? So it's just whether how fast or how slow will it be moving upwards. All right. So like I said, it's only one way ticket for treasury yields. Okay. So couple of things to watch. Like for example, this is a sad news to say. Japan's former Abe was assassinated, I think yesterday. So the thing is that this is a former prime president of Japan. All right. Yes, it might bring some impact, maybe not that huge, but if let's say he is still the prime minister, that will actually shaken the Japanese market. But it right now shaken the Japan security. If you watch the video, how can the gunsman just walk up and just give him a shot, right? So this is sad news. Abe has passed away. Not sure what is the next step for Japan as well. Next thing, Elon Musk, if you have been holding Twitter, you will feel yourself like riding on the roller coaster, up and down, right? So I would suggest that if you have not into the Twitter, or if let's say your portfolio is break even, or your portfolio losses is not that huge, it's better to step away from Twitter. Otherwise, you are just like riding on the roller coaster. It can be due next month, break the deal following months. You get what I'm trying to say or not? So this thing right now, Twitter bot is trying to sue Elon Musk because they can't simply just say yes and then no. You get what I'm trying to say? So they plan for legal actions. Legal action cost a lot of money, even though Musk is billionaire, but it's not giving the confidence to the Twitter investor going forward. All right, because this kind of thing is not healthy after all. All right, so stay away if you are not into holding any of the Twitter shares at this point of time. So it gapped down 6% due to this news last Friday. Okay, so coming up, things to watch out. Hot inflation report, like I said, is the CPI, and coming week is the kickstart of the earnings seasons again. Once again, all right. So we kickstart of the earnings season starting from the bank side. We can see that's the heavy one. Why? Because interest rate heavily correlated to the finance sector, right? So we shall see how does our bank sectors performs on their earnings reports. Okay, this is written in the CNBC. It stated that the analysts are leaving their estimate unchanged. Okay, what do I mean that? We know that it's a recession. We know that interest rate is hiking up for the past of the first quarter of the years, right? But the estimate is unchanged. That means they predict that their revenue for the company is still the same as before. So if there are any changes, it say that it should be this time wrong. All right. So this is I'm not sure how it works. If let's say the estimate is still at the high side and it came below the estimation, usually you will somehow shaken the market a bit lah. So just be aware. If you are news trader, short-term intraday trader, be aware. All right. Ultimately, hiking the interest rate is not doing any good to any companies, right? Because their debt will continue to go higher. All right, so we start off with Pepsi-Cola's earnings, followed by Delta Airline, followed by the bank as well. All right, so this is the things to take note for next week. And then I think that is 1 second is the PPI, CPI, which I mentioned. All right, so consumer price index is sensitive enough. Next year is the 10-year Treasury yield, about 3.7%, 3.07% Friday. But the 2 years surpassed the 10 years in past week for the third time. All right, this is called inverted. Inverted is not very good. To be frank, if you put money in the 10 years, your yield rate should be higher than the shorter time frame. But right now, because people can't see what is happening in the longer time perspective, so the 2 years yield rate is actually inverted. That means higher than the 10 years. That's why it's called the inverted yield curve. All right, so this is the things to watch out. Let's go into the chart itself. So let's take a look at S&P 500 since I plotted the chart in the 15th of May, which is somewhere here. 15 May. Okay, somewhere here. All right. So people who actually bought it, read it for 15 May, somewhere here, right? Okay, 4.1 or 4.2. Eventually, we hit the 4.1, 4.2K. The resistance range, we came down, couple gap, came down, pull back. Right now, we are actually trading in a channel. It's a downward channel. All right, like I mentioned, it's a downward channel. So this coming week, take note. If the earnings report is not doing fantastic, all right, we may face our first minor resistance, which is the previous high. All right, we give it 3950. If we're not able to break these bands and a whole round figure of 4K, all right, if we're not able to break this band, okay, we have a high chance to see it continue to come down. All right, but if let's say you're able to break, come down, all right, not coming back, able to come down, we will see a high of the previous, all right, low of the previous low, all right, sorry, high of the previous low, and then we will form some double bottom. But like I said, this is the downward chart, all right, downward chart. So meaning to say, if you feel uncomfortable to enter at an anti-trend pattern, then you can actually wait for the pullback to short it. All right, let me draw three figure again. First, this second just now I mentioned. Second, we will see here. Okay, so this is a two figure. You guys can watch out. All right, next, same as Dow Jones lah. Basically, same as Dow Jones. Is either I look at Dow Jones or S&P 500. It's the same thing. All right, so this is where we are looking to cover the gap before it come down. Yes, there might be no gap, but this is the range lah. 32 to 32,000 to 32,200. All right, so this is the range we are looking at. It's a downward channel. Okay, next counter we are looking at is actually our sorry which I mentioned previously is actually plug power. Okay, this is what I say. I think if I written here, maybe it's somewhere here lah. This when I mentions, I can't remember when because I didn't write down anything. This is 2021 lah. I mentioned bullish. I think it go up. All right. So right now we are looking at plug Y because I seeing the overall pictures of solar. Right. It seems like there is some strength in there. All right. There's some strength in there. And that's why it caught my attentions lah. All right. So this is solar ETF. You can see this is a solar ETF, whereby we can see that the volume is actually pumping up. This is weekly. You can see. Let's take a look on Friday. Can you see that? All right, the volume is higher. So I have some judgment that maybe solar energy may have some play out for next couple of weeks. All right, why? Because people might think that oil is getting expensive. Natural gas is getting expensive. So, no matter what, if let's say the war is going to prolong, or perhaps oil is going to stay above $100 per barrel in the futures, I think the only way to save money is really solar. Alright? Even though we can't avoid using petrol, we can't avoid using oil. Yes, it's a must at this stage, at this technology. Yes, it's a must. It's not fully converted to EV yet, alright, for electric car. But sooner or later, solar may replace it. Not 100%. I give you maybe 50% is more than enough for people to look into the solar company as well. So based on the ETF right now, from the swing low to the swing high since 2020, we are right now trading at the mid junction of the 50% Fibonacci level. All right, so all the way high, retrace back 15, bounce back 78.6, retrace back 38.2. Right now we are actually in this range. All right, so like I say, this range is a good, let me draw lah. All right, this range is a good support rate area. All right, 38.2% is a good support area. Right now we are actually above the 50%. This is the pivot point, whether it go up or go down. Okay, whether it go up or it go down. Okay, so for people who want to be, think that there is some chance in solar ETF or solar energy. This is just because this is a few stocks in there, right? If let's say you believe in solar industry, you can actually look at this 38.2 is a good support level, and then you just write it. All right, just write it. Yes, it might have something down and been resisted at the 61.8%, but there is still some mid over here. All right, with a good stop loss level. Okay, so this is why I'm looking. That's why I'm looking into individual counter like plug or any other solar counter if you are keen. All right, but plug is the one that I have been going through since previous week ago. All right, so this is the first the first counter I'm going to share, and then the next one I'm going to share with you is TSM. All right, Taiwan Semiconductor. This, can you see that? Okay, why? Because this purple line is the mirror image of here, which I mentioned previously. Okay, the double top, I say we mirror image. Yes, eventually it hit lah. All right, eventually it cross open below, close higher, weekly chart. All right, so this thing, looking at the daily chart, sorry, I think it's the monthly chart or daily chart. Let me see. Okay, so looking at, oh, give me a second, guys. I think it's the weekly chart. Okay, looking at the weekly chart, and then we change it to 200 days. I think so. Yes, all right. So we are being supported by the 200 days moving average, as you can see. Firstly, second support by the $76, the previous support level. So there's two signs of showing support at this point of time. If you can't see, let me delete all the drawings. All right, can see that? Okay, we are supported by, let's redraw. We are supported by the first 200-day moving average. Second is by the resistance here, support here. All right, so here is the previous support and resistance, which I mentioned. Correct? So this is the mirror image which I mentioned. Mirror image. Okay. So right now there might some strength at this support, and we may be looking at the upside. All right. Where shall we stop at the upside? Okay. Overall, I got no crystal ball. I just trade based on the risk appetite, based on my risk management. So I can wait for it to come back for these 40 days to chase, or I wait for it to reach the 100 days to chase. It's either way. Okay, so up to individual, because it's very tight right now we are trading. So you can use moving average as your support and resistance, or you can draw Fibonacci level. Fibonacci level, basically we can use the swing high and the swing low again. Okay, so we know this is the high. We go to 2020 swing low. Okay, I would like to use here. Oops. Okay, so right now where are we? Let's see. So we are, let's delete this thing first. Delete what I draw. Oh, it's S81. It's very close. Okay, so right now you can see, gentlemen, we are supported by the 200-day moving average on the weekly perspective chart, which is quite significant on these 200 days. And then we are also eyeing for it to rebound back, all right, to the next Fibonacci 38.2, 83. I think is most likely will hit. We are looking at $95 first. All right, so this is our first resistance level based on Fibonacci lah. Okay, this level. Okay, so this is TSM. Concurrently, if you are into the US side, you can look at AMD, which is kind of interesting. It hit my previous support at 72, well supported by 200 days moving average. I think it may return to 85. Otherwise, breakthrough $900 is always the major resistance. All right, major resistance. So I think there's some upside on the chip sector unless there's any governments come into play. All right, so this is the view on plug AMD TSM. All right, so let's see one last counter for today. I mean, last two, I guess, is actually on Hang Seng Index. Yes, okay. So for Hang Seng Index, good thing we actually open gap up, come down. I think just to close the gap, retrace back. So I don't see any weakness sign for Hang Seng Index for China's stocks. So people who are believer on Hong Kong market, Chinese market, you may continue to hold on to any of the China shares, which I did on this HST. I mentioned 3 times in a row in my weekly report. All right, so we may see some retrace back. I may see a further retrace back, maybe near 80 cents or 70 plus cents is where I will accumulate again. So I will continue to monitor. Uh, After all, I believe that Chinese market will still have more room to recover than the US side. Okay, so this is my take. So that's all for this week weekly market update. Hopefully you guys enjoyed. Not much counter to go through. I also never go through on what I did previously on Bitcoin, on Coinbase, which I shared. All right, there is not a recap because it's a long weekend for Singaporeans. It's a weekend for whichever country you are. So enjoy your weekends. We shall see again. Put the plug into your watch list. I will give a call if the time's going. All right, that's all. Enjoy your weekend, everyone. Bye bye.